Good morning and welcome to Beyond the SEAF Model. I'm Jack Kosar. This is effective for the week of September 23rd, 2024. Let's get started. Our SEAF signals for this week: consumer staples, industrials, and real estate. Broadly looking at these rankings, these aren't quite as high as we've been seeing lately, as we don't have a particularly clear leader. As we have been, utilities have been that leader previously, and obviously you can see we've seen a big reversal in utilities with some relatively strong outflows, point negative 22% for utilities. Not a super big move, but enough to knock it out of the top three and into our neutral ranking. Interesting enough, seeing energy move into one for the trading week, but is very much being held back by its tactical month and strategic quarter. And last but actually least, technology coming in with the worst ranking, showing a bit about neutral on the week, 0.07 negative on the outflow for 8 in the trading week. Couple of things to highlight here. Seeing some positive momentum in consumer discretionary going from 8 to 5 to 3. And again, we had a Fed cut last week. I believe we're in a little bit of a transitionary period here for SEAF. As we can see here, when we're really gelling with SEAF, we get all of our green sits up here in the top. All of our red sits up down here at the bottom, and we really start seeing that momentum take place. We are seeing a little bit of disparate reds popped in, some greens here toward the bottom. Energy with trading week 1 is a 0.3% increase, which is below our average of 0.4%. So not a ton of conviction here in the top pick. Industrial is relatively strong here with its 2 coming in at 0.17, which is what we like to see for our second in the trading week. But again, with 6s across the board here for tactical month and strategic quarter, industrials is a SEAF signal, but we are in a little bit of a transitionary period. A little bit of pullback from utilities at 10, continued pullback in financials. It's now spreading into the tactical month. Interesting to note, though, looking at the overall flows for the sector spiders last week, we were dead neutral through Wednesday. And obviously we had that Fed cut on Wednesday with a bunch of money flowing in, 0.15% increase in overall flows for the sector spiders coming in just on Thursday. We ended up being up 1.2% on the week, meaning we were relatively flat going into that Fed cut, and then that money flowing in strongly on Thursday. Ultimately what I'm saying is we're in a transitionary period. This is going to be a very interesting thing to look at next week, especially with our heat map, to see how this kind of, after the Fed cut, after we kind of renormalize in SEAF. Heading into our rainbow charts. Yeah, I wanted to bring up energy. Energy was the top inflow for the trading week, a bit being the second to last overall in the rankings. And I wanted to highlight this just because SEAF allows us to kind of cut out some of the noise with the ebbs and flows of our of the fund flows. So, really strong trading week, that kind of punted us up into this neutral area, but we aren't seeing the relative outperformance here. And this is why we don't trade SEAF based on fund flows on a week-to-week basis. There's just way too much movement. It doesn't build any momentum or any strength behind it. So, a place to keep an eye on. It was still 1 in the trading week, but not enough to make any kind of moves in that relative outperformance that we would see. We would need to see kind of several sustained weeks of heavy inflows into energy for us to really start to get into this upper neutral, into favored, and get a turnaround in what's been a downtrend in the relative outperformance versus SPY for XLE. Real estate. Real estate is a SEAF signal. It comes in at 3rd, ranking of 14. And, we are seeing a little bit of sustained upper favor, or little sustained favored ranking for real estate. That has resulted in a nice relative outperformance since late June, early July. A little bit of a pullback here. Real estate was a trading week of 7, really being held up by its tactical month and strategic quarter, but theoretically with a Fed cut, could see some continued strength in real estate, but we'll have to wait and see if real estate can rebound from its 7th on the trading week. But overall strong, seeing some really nice strong outperformance in real estate. Industrials pokes its head into favored and continues this uptrend in relative outperformance that we've been seeing since that late June, early July mark. We've been poking into favored over this time period, a little bit into neutral, but overall continuing this trend of relative outperformance versus SPY. Industrials coming in strong on the trading week with 0.17, as I mentioned. Ranking for 2 for that. So, looking for some continued strength in industrials. I was looking at the kind of the pie chart in terms of how much industrials has taken up in terms of its percentage of the pie of the S&P 500, and I believe it's at a peak of more than a year. So industrial is doing well, and hopefully we can see continued success in industrials. Last but not least, consumer discretionary. Consumer discretionary is not a SEAF signal for this week, but we are starting to see that upward trend that we like to see in that positive momentum. As I mentioned, it went from a strategic quarter of 8 to a tactical month of 5 to a trading week of 3. That upward trajectory, as we've been seeing, has performed in a little bit of relative outperformance versus SPY. So for managers or individuals that are looking to get into consumer discretionary, this might be your lead off to take on, as we've been seeing this positive momentum. This pattern doesn't work every single time, which is why we don't, currently consumer discretionary isn't built into the SEAF signal for this week, but we are seeing some positive things in the flows, some positive momentum in the relative performance, which is kind of turning this downward trend around. So we will see what happens next week, but some positive things happening in consumer discretionary. That is all I have for this week. I look forward to breaking down the SEAF model with you all next week. Thank you.